If you guys do this wrong, you're going to get wrecked. So again, if there's any time you're paying attention, put your phone down, pay attention right now. All right, everybody. Today we are talking about something called Fibonacci. Sounds like Fibonacci's, but it's not a type of cheese, although it sounds like it. And I'm not going to get into the nitty gritty of it, like the definition and so forth, because it doesn't really matter. But like, long story short, some dude somewhere at one point decided to like come up with these numbers that are found all over like life in the world. I don't know. Look up the definition if you care to, like some nerdy shit. But anyway, yeah, some numbers that are apparently relevant in life. We're not talking about these numbers in life. We're talking about these numbers in trading, but apparently they're still relevant. And the dude's name was Fibonacci. So we're talking about the Fibonacci retracement tool. There is something called a Fibonacci extension tool. A, I don't want to confuse you by talking about that. And B, I don't even use that. So we're not going to talk about that because it's stupid and you don't need it. So to find our Fibonacci retracement tool, which is the topic of the video, on the left side of your screen here, if you click this little arrow, it is the very first one here. Alternatively, you can press Option F if you're on Mac and something else F if you're on not Mac. But if you're on not Mac, then you should probably get a Mac and then come back to this video. No, I'm just kidding, but like not really. Anyway, so this is your Fibonacci retracement tool. This is how to find it, okay? Throughout the video, I'm going to be using the shortcut, but this is how you find it, okay? So let's click it, and let's look at what our fib will look like regularly. Now, this is my version of the fib. If I change this to the default version, this is what yours will look like, and it is a lot uglier than mine, as you could see, okay? What are these numbers? What are these levels? And how can we use our Fibonacci? Well, in short, we're looking to pull our Fibonacci from a swing high to a swing low, okay? For those who don't even know what a swing high or swing low is, it is just by eye on whatever time frame you're on, look for a high and look for a low. Like this is clearly a high, right? That's a swing high, and this is a swing low. So this would be an accurate pull of our Fibonacci as of right now. Okay, there are a bunch of numbers here on the side, and all the numbers means essentially is how much the price has retraced or gone reversed from the other direction from the original move down. I know I explained that horribly. Let me try to draw it for you. So if you can see here, we had this whole move down from this point, which was 30,352 on Bitcoin to 850, we'll call it for easy numbers sake, okay? So price came down that many dollars, right? The retracement tool will now show us how much of this zone, right, of the entire move down, price will now retrace or reverse. So right now, as we can see, price is at the 236, and these are all percentages, guys. So whatever dollar value this amount is, right? So let's go back up here. So price retraced a total of, give or take, we'll say $1,500, right? So 23% of $1,500 is $360, okay? So that's what the Fibonacci numbers are, and that's what it's saying. It's saying that from our entire drop, 23% of our drop has been recovered. All right. Now, these numbers are important and they can be relevant. They're not relevant for the reasons that retail teaches you they're relevant. You guys know on this channel, we talk about following the money and we don't talk about geometry shapes or weird lines or anything like that. But I will say that Fibonacci's, in my experience, actually do work. I think that they work because there's money there, there's liquidity there, not because you happen to know how to draw a line and you're aware of the levels. But I don't want to confuse you. Long story short, they do work. And certain levels work a lot better than other levels. So we're going to talk about which levels are the best levels to watch for, okay? Now, this is what it looks like on default. We don't want to have it on default. I don't like the background. I mean, you could do whatever you want, but I don't like the background colors. I like the numbers on the right side. So I'm going to show you how I would customize it now for myself, okay? So you double click and you have all these values here. The 4, 3, whatever, we don't need that. The 2, 6, we don't need that. 3, anything above the 1, we don't need. The 1, 6, 1, 8, we don't need. The 1 you can choose to keep if you want. We'll come back to these other numbers a little bit later, but for now, we're going to turn off the 2, 3, 6, the 3, 8, 2, and the 0.5. Okay, we're going to turn the background off so we have nice clear levels. I usually keep the trend line off, which is this line across here, just because I like my charts to be clean. But for demonstration purposes, we're going to keep it on just in case you guys are relatively new and don't follow along as easily as others. Okay, so now this is what our chart looks like, okay? We have our new Fibonacci. Well, same Fibonacci, but it's customized and it looks a lot more clean. And there's a reason why I left the 618 and the 786 on. And the reason I left that, oh, we're getting some notifications here. And the reason I left those on are because these values are the most reactive in terms of Fibonacci. So we had the 0.5 there, the 236, the whatever. And they're not as reactive. And what I mean by reactive is if price right now decides to come up all the way up to the 618, it is likely that we will get some kind of reaction and potentially reject off of this area, okay? It's all zones. It's not direct or exact prices. It's all zones, but we can expect somewhat of resistance at this level because price has now retraced 61.8%, right? This is a percentage of our entire move down. Why do these numbers react the highest? I don't know. It's something to do with the Fibonacci and the guy that invented it. Couldn't really tell you. My best guess is that human psychology doesn't change, right? The market maker's business model doesn't change because human psychology doesn't change. So I'm assuming that around the 618, if somebody was to go short at any period wherever, once price returns back to the 618, those people, if you think about market psychology, I have a video on that, those people will now maybe flip their positions and start to go long, and then that's the exact point in which price gets rejected. So kind of things like that. It's all market psychology. It's all where the money is. It's not actually about the levels itself. That's not why they work, at least in my opinion. But I mean, you don't need to know the behind the scenes of the fibs to know that they work. So these are the two levels that we want to pay attention to mostly. Now, if we open up our settings again, I want to add one more value. Okay, I want to bring your attention to one more value. It doesn't matter which one you pick here. You could pick anyone and turn it on. We are going to change the value to 0.65. And for me, I like it to be yellow. Okay? The reason I'm doing this is because if you've seen any videos on Fibonacci, you've probably heard the term golden pocket. This is our golden pocket. And the reason it's our golden pocket is because both of these levels together are very, very reactive. So you can expect price to somewhat have a larger reaction than just on this line, but in this general zone, okay? So this entire zone, you can now think of as very strong resistance, okay? This is probably the most reactive level, and it's called the golden pocket. Now, for me, I know that my golden pocket is very close to the 618. Like, well, the golden pocket is in between the two levels, so this whole range. But I know that the 0.65 is very close to the 618. So I actually do not keep the 6.5 on. I turn it off. But I know that I'm looking a little bit beyond this line, right? I know it's like this general area, but I keep it off because it's just a little bit cleaner for my charts. And obviously when you're looking for a bunch of levels and there's a bunch of lines and so forth, keeping it simple, keeping it clean can be very beneficial to you. One more thing I forgot to do is change my my labels to the right. I like them on the right. And I actually don't need the levels either because I know the levels. So I know that that's the 618. All my stuff is color coded. So I usually turn that off again, just to have it a little bit cleaner. Sometimes I'll even turn the values off, but usually I keep them on. But yeah, so this is what my basically default. I changed some colors, but this is like essentially what my default will look like. Okay. So once again, we take from our swing high to our swing low, and we're expecting somewhat of a reaction there. Now, what do we do in terms of the other levels, right? Like I closed all of those off, and why, right? How do I use them? Well, I do use them sometimes, and the truth is that I use them on larger term time frames. So this is the 5-minute time frame right now. Let's move over to the 4-hour, and let's take a look on a larger scheme of things, what's happening, right? So you could see we're on a very small area of price action right now. But remember, we're using our Fibonacci from our swing high to our swing low, or our swing low to our swing high. So right now we're going to use this example. We're on the 4-hour time frame. This is our swing low. You can see it's clearly the lowest point for a while. And this is our swing high, right? We take it from the lowest point to the highest point. And now we have, I'm going to delete the old one. Now we have our Fibonacci. I'm going to extend this so we can see it. But now we have a nice fib, a nice swing fib that we can look for levels on. Now, I use the 382 and the 0.5, maybe the 236, but not super common. But I do look at these levels in general on larger time frames only. I'm going to actually put the labels back on. Sorry, I'm going back and forth, but just so it's easier for you guys. Okay. So I do use these in a grander context, because when I'm doing my technical analysis, I have daily levels, I have naked daily point of controls, we have the fib levels. Like I'm looking, I have vector candle zones and, you know, swing failure patterns. And there's a lot of confluence that I'm looking to create, or that I'm looking for. I'm not creating it, but that I'm looking for when I'm trading on larger term time frames, right? If you guys have seen my ranges video, you're probably already ahead of the curve, but I trade ranges. So when we come to the bottom of a range like this, I'm looking for additional confluence, and that's why I use these other levels, because the greater the time frame, the stronger the levels will be. Like if you come on the 1 minute time frame and you pull a Fibonacci, it's not going to hold the way that a 4-hour Fibonacci level will. Obviously, the higher term time frames are take a lot more precedent, and they are a lot more powerful, a lot more significant. So I just want to mention that. That's how I use them. But now I want to talk about how we can use them more on a day-to-day basis, and how you can enter with them and get super accurate entries where you literally don't even have 1 penny in drawdown. I mean, I wish that was ever the case. It's not. But let's talk about how we can use them in terms of ranges. Now, again, if you've seen the ranges video, you're a little bit ahead of the curve. So good for you for keeping up and doing your homework. But let's talk about how we can use them in terms of ranges. All right. When it comes to smaller term time frames, now we've been in this range for like 3-4 weeks. So it's a large range. It seems like we're breaking down. I've been vocal about thinking that we're going to break up, and I kind of still think that we will. We'll see what happens. But when it comes to trading ranges, I mainly pay attention to the levels that I mentioned, which were not the 3.8. I don't put the 3.82. I don't put the 0.5. I keep it kind of as is. Okay. And when we talk about actually entering, when we're on like the 1 minute or the 3 minute, I'll get into a little bit more detail. But I want to show you how we can draw our Fibonacci. And again, this works on all time zones, okay? Now, if there's nothing else you pay attention to in this video, you have to pay attention right now, because this is the important part. Before I do that, the first 2 numbers of the VIP Discord, because I just remembered to do it, are going to be 5 and 7. And I'm going to write that down because I don't want to forget it. 5 and 7. Perfect. Okay. Are going to be the first 2 digits for the VIP Discord. All right. How do we draw our Fibonacci correctly and, eliminate error? Because if you guys do this wrong, you're going to get wrecked. So again, if there's anytime you're paying attention, put your phone down, pay attention right now. Your Fibonacci has to go in chronological order of time. What do I mean by that? It must go from left to right. It has to. Let me show you what to do versus what not to do, okay? Anytime we have a massive pump or a massive dump, you are immediately looking to pull your Fibonacci tool. We're on the 1 hour time frame, and I'm going to show you how we could use it on the 1 hour time frame if we were back in June. Here we had a massive pump. We don't want to FOMO into the pump. If you decide that you want to, I have strategies to help you do that, but that's not what we're talking about. In general, what you want to do is start getting your Fibonacci tool ready to go. So as soon as we have what you could consider a swing high, you can start pulling the fib to our swing low. So let's do this together, and let's go in chronological order. Again, I want you to pay attention to this. We have our swing high, and then we had our swing low. Let me draw it out. We had our swing high, and then we had our swing low. Remember, this is the 1 hour time frame, so it takes some time. Okay, so we pull a fib from our swing high to our swing low, and now we wait. Look at what happened right away. Price comes down, bounces off the low, comes up right into our reactive zone. Remember, this is the golden pocket and the 786. Let me turn the golden pocket back on for you guys, right? So it rejected off of this zone. Now, when you're trading shorter term time frames, what I do is I will put a box around this area because I know that this is resistance. And then you look for your market cipher B in terms of entering and so forth. But you know that in this general area, you're definitely not longing because this is resistance and you're looking to short. And what do you know? It came up, it passed the golden pocket a little bit, but ultimately it rejected and fell back down. So that would have been a successful trade right there. And just using Fibonacci alone, you know, you're not using any other confluence, just Fibonacci alone, you know that you would have had a winning trade there. Let's keep it moving. Let's delete this here. So now what happens when you break the high or break the low? Well, we're going to adjust our fibs again. So this high has not been broken. Now we move a few more candles and we see that we have a new low, right? This was our low previously. Let's draw a line there. That red line was our low, right, on this candle. And now we broke the low. So what do? This is our new range low, right? And we move our Fibonacci. We move it down. Okay, and then across. And then we just wait. We just wait to see what's going to happen. In this case, price didn't actually make it all the way to the golden pocket. That's fine. Came down, rejected, and then shot up. No problem. But you see that we're going from left to right, okay? It's going from the high to the low. Now, it can get a little bit confusing, and this is why I keep certain levels off because you could have a lot of fibs on your chart. So let me show you what I mean by that. Remember, fibs can go from the swing high to the swing low, and they can also go from the swing low to the swing high. So this here is our swing low. After the pump, right, we came down and we bounced off of this zone. So what do? We take our Fibonacci tool from the bottom to our swing high, which is this level up here, and we drag it across. Now, in this case, it didn't hold. But again, this isn't a very strong swing low, right? This is the 1 hour candle, and it didn't really give us many or strong support there. But nonetheless, that's how you would do it. Okay, once we put in a new low, you grab your Fibonacci tool. I'm going to delete the old one. Once you grab, you would keep it on though. By the way, you wouldn't delete it. I'm just deleting it because we want to clean up the chart a little bit, but you would for sure keep it on. But we have a new swing low, right? We had a new low, and we drag the Fibonacci from the low to the next swing high. I want to show you what not to do. So this high is lower than this high. However, if we're looking in chronological order, we're only looking to the right, which means this low happened after this high. So we ignore this high. It's not relevant. We look at the next high that comes. And what do you know? Look what happens. Price comes up, comes down, literally rejects right off of the golden pocket, right there, perfect entry, and continued to the upside and then eventually broke up higher. And now we have a new, right? Can you guess it? Range high. So this is our swing low. This is our swing high. Let's drag our Fibonacci tool and let's look up, right? Let's delete this circle. And now look, we have another one. Remember, swing low, swing high. What happens? Price comes down, bounces literally exactly off the 618. I'm pretty sure this is to the penny. I'm going to zoom in so much. Look at this. Look how zoomed in I am. This is okay, not to the penny. How much are we short here? We're short 30 cents. 32 cents to be exact. Okay, close enough, right? Close enough. So this is how you can use your Fibonacci retracements to find really, really wicked entries. So I'm going to show you guys how you can actually enter this and a strategy that is a high success rate. And again, this works on all time frames. So we're going to jump down to the 1 minute or 3 minute right after this. But I want to show you how you can do it on the 1 hour time frame. I'm going to teach you 2 ways that you can actually enter when you see a golden pocket like this, okay? You can either put your full order here. Let's just say you have $1,000. You can put your full order there and have your stop loss under the 786. Or you can split up your order. So let's say 250, 250, 250, 250. and then have your stop loss under the 786. And if you do it this way and these 3 orders get filled and this one doesn't fill and you start to see the rejection, you can mark it in your last $250 to enter. But typically when you're entering golden pocket trades, you're looking to put your stop loss a little bit under your 786, okay? I don't put it at the 786 because oftentimes I find Bitcoin will wick down kind of like something like this, and then you'll get stopped out. So I put it a little bit under the 786. Now, this is the 1 hour time frame, and this is a pretty big range to just have a stop loss like $300 in drawdown. If you choose to do that and you're like a swing trader or whatever, cool, no worries. But for the scalpers, we're not really looking to do this. We are aware of this level, so perhaps in this case, you would put your stop loss under the golden pocket or under the 0.65. Of course, you want to be looking at other confluence, but generally that's how you do it, right? Now, before we jump onto the smaller term time frames and I show you an example of how you can enter, I want to just talk about one other thing, which is you can really take your Fibonacci's from any swing high to any swing low, okay? So this is our absolute swing high for this range. And remember, we're going in chronological order, so this is our swing low at the time, like let's just say we're on this candle. This would be our swing high, and this would be our swing low. And once again, if you took this trade, right, you can see we're at the golden pocket, 786 zone. If you put your stop loss right there, you would have had a winning trade, okay? And how much percent is this? 3%. Not bad, not too shabby for someone that uses only Fibonacci's. But I want to show you, obviously these are the most powerful ones, but I also want to show you that you can pull from this high as well. Now, these levels are not going to be as reactive, but remember, your absolute high, your absolute low, but you can also grab it from your second high to your low. And then we have new zones that we can look for. In this case, they didn't play out, but you can do this. Whenever you do this, whenever you choose to do this, you also may want to consider grabbing your entire range Fibonacci, like this one is as of right now, and turning on the other levels, looking for additional confluence. So you're going to turn on the 0.5, you're going to turn on the 236 and the 382. And then you're going to pull your normal fib from the other level and look what's around the golden pocket. Okay? See how it can get a little bit messy if you have all these levels on? Again, I don't typically use these. I use other ways as confluence, like daily levels and such. But that is something that you can do. Okay? So fibs, guys, is a patience game. It's a very big patience game. But that's a way to do it. And every time the high is broken, you want to adjust your fib, and every time the low is broken, like it was here, you want to adjust your fib. So the most previous high before this low would be right up here. Or actually, no, it would still be this high. So we grab from this high to the new low, and that is our new golden pocket 786 zone that we're paying attention to. And then vice versa. As time continues, we have a new low, so we're going to pull it up to this high, right? And right here, we got front run a little bit, but look, this one here, we bounced right here. And then we came up, we bounced off the 76. We came back up. You see what I mean? So that's how you can use fibs, overall. Now, if we jump to a very, very, very small time frame, like the 3-minute time frame or the 1-minute time frame, this is really where, the art form kind of comes in. Now, remember, if you're trading ranges, we have a large range, and then we might have a medium range within the large range, and then like a very small like scalping range. This drop happened today, and what can we do right off the jump? We can start to pull Fibonacci's, right? We have our clear low, and right now we have a high based, remember, it's from left to right. So we have our high. I don't know what's going to happen next. Perhaps price can come down, bounce somewhere off this zone, and then reject off of it, and then go to the upside. And when you're doing this on smaller term time frames, you have to put the stop loss beneath the 786. So if you haven't seen my my risk management video on YouTube, make sure you go check that out, because there's a lot of good information there for sure. Because that will teach you how to like get your proportion sizes and whatever else for the entries. But yeah, the stop loss has to go a little bit and give it some breathing room, you know, give it some, like, put it there or like down here even. It has to go beneath the 786 if you're going to take that trade, especially on super short term. What was I going to say? Super small time frames. Now, if we break out of a range, right? This is our new range, right? As you can see clearly. How do we find levels if we break out of a range? Well, we kind of do the same thing across ranges, and you can do it multiple ways. Remember, we're on the 3-minute time frame right now. So what do? We have our low, and we have a swing high right here. You can grab your fib, and you can run it down like this. So now I know if price comes up to 29481 or 29500, we'll say, just to make it easy, I'm not looking for longs. If anything, I'm looking for shorts, right? Along with my other confluences, of course, but I'm looking for shorts there. I'm not looking for longs. And as you can see, we also have another swing high up here. So let's do what we learned, and let's pull another Fibonacci, right? Let's look and let's see if we have any confluence with our additional levels. Not really. I mean, we're at the 236 right now. Not really. We don't have anything. I mean, it's kind of in between each other. But that's how we would do it. Absolutely, that's how we would do it. And again, depending on the time frame that you're trading on, will determine which levels you pull it from. This is the 3 minutes, so this level is acceptable. If you come on the 1 hour, you can see like this isn't really a swing high on the 1 hour time frame. So you maybe wouldn't even use this one. You would use this one up here, right? It has to make sense. Or this one up here. Now these levels are so super close, so I don't think it would even make that much of a difference, because remember, we're looking for zones. We're not looking for exact levels. But that's how you would use your Fibonacci, guys. It's very simple. It's a very simple indicator. I'm going to show you guys real quick my settings. I have a few, but my most favorite one is this GP7 one, where I don't have the 1 on or the 0, because again, it's just extra noise. I don't need that. I just need my chart to be as clean as possible. And I know that my my golden pocket is here, and I know obviously the 1 is there and the 0 is there. But yeah, I try to keep it as clean as possible. I only have the prices on the right. I know this is the 618. I know this is the 786. I know the 65 or the gold, like this golden pocket area is right there. So I don't need that. But these are the settings that I like to use typically, and then obviously I'll go in and I'll adjust it. But yeah, and especially when I'm doing this on shorter term time frames, these are the levels that I'm doing. And if I enter either one entry there, or you know, I split it up, the stop loss will always go above the 786 in this case if we were looking to short. And guys, that's honestly Fibonacci in a nutshell. I mean, that's really the only way that I use it. You can use it on all time frames. Obviously, the higher the term time frame, the better it is in terms of like relevance and reactionness. That's not a word, but it is today. But yeah, I encourage you to go back in the charts and not practice it, but pull some fibs, and you'll see like that these levels are very well respected. And if you have the patience to, excuse me, sorry, I'm hiccuping. If you have the patience to not freak out when price is pumping without you, you can get some pretty wicked entries with these Fibonaccis, as I showed a couple times throughout the video. So I very much encourage you to go and take a look, go back test it, go see that they're very reactive zones, the 786 and the 618. Aside from that, guys, the last two numbers of the VIP Discord we're going to make is 00. And if you enjoyed the video, please make sure you like. Please make sure you subscribe. Guys, it's been two months, and I'm already at 750 subscribers. That's crazy. We're 250 away from 1,000, and once I'm at 1,000, I get monetized. So, you know, I'm going to be taking YouTube full-time in August, so I really would appreciate any support that you guys give. And if you're not already in the Discord, make sure you join the Discord. The link is down below. We have a great community in there. We're talking all day about levels and what trades we're looking for. We got scalpers in there. We got day traders in there and swing traders in there, etc. We just have a good environment going on there. And I also have a VIP section of my Discord where you get the levels, the exact levels that I'm looking to trade, and I give you live updates on how I think the market's going to move, and especially what I believe is going to happen when we're at those levels that I give. So it is very beneficial for you to join, and the way to join the VIP Discord is to give or DM my bot the 4 digits that I gave in this video. So if nothing else, guys, that's it. That's all I got for you. I hope I provided some value. I hope I see you in the Discord if you're not there already. And I'll catch y'all in the next one. Happy trading. Goodbye.